the Finance Ministry has just made an announcement that remember there were 34% tariffs on all US goods coming into China. That's now been increased to 84%.
President Trump is now promising a new 50% tariff on China on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%.
That includes a 104% tariff on China, which, by the way, has responded this morning by hiking their tariffs on U.S. goods to 84%. That is up from the previous 34%.
Let's return to our breaking news now, where China has announced 84% tariffs on American goods coming into China.
Things got even messier when Trump, on April 9th, hit pause on most tariffs against other trade partners for 90 days, hoping to cool things down. For a hot minute, that move sent U.S. stock markets soaring, with investors breathing a sigh of relief. But the good vibes didn't last long. Trump seemed to miss the memo that China wasn't part of that timeout, and instead, he bumped up tariffs on them to 125%. China matched that energy, sticking to their new 84% rate, showing they're not here to play nice. This back and forth is more than just numbers. It's setting the stage for a showdown that could shake up everything, from Wall Street to your wallet. The tension's thick, and everyone's watching to see who blinks first in this high-stakes game. So the tariff war is already a mess, but China just dropped a bombshell that's got everyone on edge. They're reportedly mulling over selling off their massive stash of U.S. Treasury bonds, worth somewhere between $900 billion and $1,100 billion. That's not just a threat, it's being called a trade atomic bomb, and it's sending shockwaves through Washington. The Trump administration's in full-on panic mode, and for good reason. This isn't a small move. China's basically saying they're ready to hit the United States, where it hurts most, right in the financial gut. Here's why this matters. China's been one of the biggest buyers of U.S. debt for years, helping keep America's borrowing costs low. But with Trump's tariffs squeezing them hard, Beijing's looking to play their ultimate trump card. If they start dumping those bonds, it could rattle the entire global financial system, not just the two countries. Experts are saying this could spike borrowing costs for the United States, tanka the dollar's value, and send inflation soaring. It's a high-stakes gamble that's got Wall Street sweating bullets, and nobody's sure if China's bluffing or ready to pull the trigger. Either way, the tension's cranking up, and the world's watching to see how this financial showdown unfolds. All right, with China dangling that bond-selling threat, the financial stakes are sky high. If they go through with unloading their $900 billion to $1 trillion, $100 billion in U.S. Treasury bonds, it could spell big trouble for the United States. Experts are sounding the alarm this kind of move might jack up America's borrowing costs faster than you can blink. The dollar could take a nosedive, losing value on the global stage, and inflation might start climbing as prices for everything from groceries to gas creep up. It's the kind of shock that could rock the domestic market to its core, leaving folks feeling the pinch in their everyday lives. What's making this even scarier is China's already taking steps to back away from the dollar. Reports are swirling that they've told their banks to cut back on dollar purchases, and they're starting to offload some of those bonds. British media is reporting a full-on sell-off in the U.S. bond market, with yields spiking and Wall Street caught in a whirlwind of panic. For years, China's been a major player in the U.S. debt game, using their trade surplus to buy up bonds, keeping their reserves safe while helping the United States manage its deficit. But now, with Trump's tariffs hitting hard, Beijing's signaling they're ready to shake things up, and the markets are feeling the heat big time. Now that the markets are feeling the heat, let's dig into why China's even thinking about this bond-selling move. For years, people thought Beijing would never go there, because it's a double-edged sword. Sure, dumping their $900 billion to $1 trillion $100 billion in U.S. Treasury bonds could send America's borrowing costs through the roof and tank the dollar, but it'd also hurt China. If they sell off big, the value of their remaining bonds would take a hit, and their own dollar-based reserves would shrink. It's a lose-lose scenario since both countries are so tied up economically, and nobody really wins when the global system gets rocked like that. Still, Trump's 104% tariffs have pushed Beijing to a breaking point. They're not backing down, matching the United States with their own 84% tariffs on American goods, basically severing trade ties bit by bit. Trump's been saying he wants a deal, but insists China make the first call, while Beijing's like, you lower your tariffs first, then we'll talk. It's a standoff with no breathing room, and as we head into late 2025, the tension's thicker than ever. Some experts think China might not go all in with a massive bond sale, but could still play hardball by selling just enough to make the United States sweat, escalating the financial pressure without completely blowing up their own game plan. Okay, with both sides playing hardball, China's not just stopping at threats. They're laying out a bigger game plan, which is a clear sign they're trying to step away from the US currency's grip. They're looking to diversify their reserves, pushing hard into alternatives, like the digital yuan and boosting trade in local currencies across Asian markets. It's a long-term strategy to shield themselves from sanctions and cut down on their reliance on the dollar, which has been the world's go-to currency forever. China's basically saying they're ready to rewrite the rules of global finance on their terms. This isn't just talk, it's already shaking things up. US stock markets are taking a beating as rumors of China selling off their $900 billion to $1 trillion, $100 billion in Treasury bonds spread like wildfire. Last week, investors got spooked, kicking off a wave of panic selling in the bond market. Funds that usually see bonds as a safe bet started bailing, worried that if China unloads, interest rates will spike, inflation will climb, and bond values will tank. That fear's dragging down stocks and putting pressure on the dollar's exchange rate. It's a chain reaction, and with Trump sticking to his tariff guns, the markets are caught in a whirlwind, unsure if this financial storm is just getting started. With China's long-term financial plays shaking things up, the United States is feeling the pressure on both economic and political fronts. Markets are already rattled, but now, folks in Washington are starting to freak out too. Some members of Congress are sounding the alarm, warning Trump that pushing this tariff war further could backfire big time. With one saying, continuing the tariff war may be shooting ourselves in the foot. They're worried that if China starts unloading their $900 billion to $1 trillion, $100 billion in Treasury bonds, interest rates could spike, and the United States might get dragged into a full-blown recession. That's a scary thought for an economy already on edge. Social media's buzzing with chatter that China might actually come out on top in this trade battle, especially if a bond sell-off tanks investor confidence in the United States. Some are pointing out that a panicked bond market could open doors for other Asian markets to swoop in and grab opportunities while America's busy reeling. Trump's still talking tough, claiming he's determined to win this trade war, but behind closed doors, there's talk of opening negotiations with Beijing to cool things down. Analysts are saying if China goes through with the bond dump, the Trump administration might have to back off fast, or they'll risk a financial mess that could hit everyday Americans hard, from higher borrowing costs to a shaky dollar. All right, while the United States is sweating over a potential bond crisis, the rest of the world's getting nervous too. Countries like Japan and some in the European Union, who also hold big chunks of US Treasury bonds, are worried. They'll get caught in the crossfire if China starts selling. A spike in US interest rates could mess with global money flows, pushing investors to ditch the United States for safer markets. It's not just a problem between the two big players. The whole world economy's on edge, wondering if we're staring down a new crisis. Some are even looking back at the 1930s, when protectionist policies led to the Great Depression, warning that history might repeat itself if this trade war keeps spiraling. Trump's trying to play it cool, saying China wants to make a deal, but they don't know how to start, and that he's waiting for their call. But Beijing's not budging, firing back. You remove the tariff walls and we will reciprocate. Neither side's giving an inch, and with tariffs already at 104% on Chinese goods and 84% on American stuff, trade ties are hanging by a thread. It's like watching two stubborn friends refuse to apologize, except their fight could tank the global economy. Everyone's holding their breath, hoping for a compromise before this financial tug-of-war pulls us all into a mess we can't climb out of. With the world on edge, the threat of a financial meltdown is getting real. If China starts selling off their $900 billion to $1 trillion, $100 billion in US Treasury bonds, it could spark a crisis that echoes the 2008 crash. Big outlets like The Guardian are reporting a dramatic sell-off in the bond market, with panic spreading fast. Reuters and Forbes are sounding the alarm too, with headlines warning that a US market rally's at risk if China keeps unloading bonds. Even CNBC's chiming in, pointing out how rising bond yields could hit the housing market hard, jacking up mortgage rates and cooling demand for homes. It's a domino effect that could ripple through the whole economy. Social media's buzzing with warnings too, with some saying a major recession might hit by 2026 if this keeps up. Higher yields mean the United States would have to borrow at steeper costs, fueling inflation and squeezing everyday folks even more. Trump's tariff strategy, already at 104% on Chinese goods, has turned bonds into a target, and the fallout's got everyone spooked. Analysts are torn. Some think China won't go all in because they'd hurt themselves, too, but others see Beijing's moves as a way to make the United States sweat, even if it's just a slow drip of bond sales. Either way, the tensions turn the global financial system into a pressure cooker, and nobody's sure if it'll blow. As the threat of a financial crisis looms, It's clear this trade war has turned into a full-blown financial showdown. Trump's 104% tariffs on Chinese goods have pushed Beijing to the edge, making U.S. Treasury bonds a target in this messy battle. Even if China doesn't dump all their $900 billion to $1 trillion, $100 billion in bonds overnight, they can still make the United States sweat by slowly pulling back, sending ripples through the global system. Social media is calling it a potential bond atomic bomb, and the stakes couldn't be higher. Nobody wins if this spirals into chaos. So what do you think? If China pulls the trigger and starts selling, will the U.S. economy tank? Or is this all a big bluff? Who's got more to lose if Trump doesn't back down? It's a tense moment, and the whole world's watching to see how this plays out. Will we see a trade and finance conflict drag on into 2026? Or can these two giants find a way to cool things down? Drop your thoughts in the comments. Give this a like if you're hooked, and hit that subscribe button for more updates. We'll be keeping a close eye on every twist and turn, especially if that bond bomb starts ticking louder. For now, the question on everyone's mind is, how's the world going to handle this financial face?